Hello traders and welcome to another video review. Today is Thursday, 9th of September 2021. Let's take a look at the Forex calendar. It looks like it's going to be kind of a busy day today. So what do we have here in the menu? We got the CPI index from China scheduled for release DP night, 3:30. It's already been done. 0.8%, which is less than forecast, less than a month ago. So there is no inflationary pressure. In China, producer price index jumped to 9.5% from 9% and beats the expectation of 9.1%. So kind of a mixed data here. The event of the day is the European Central Bank interest rate announcement scheduled for release at 2:45 p.m. of course. The market participants expect the ECB to leave the interest rate at the level of 0%. Deposit facility rate and marginal lending facility are going to be released as well at the same time, together with the monetary policy report. 2:30 ECB press conference. So we will see what the ECB president will have to say regarding the inflationary pressure, which is rising across the Eurozone, and of course the interest rate and the future monetary policy announcement. Especially the key here thing is that the questions are going to be presented to the head of the ECB by the journalist might be kind of a tricky, might be kind of a little bit confusing. So let's see how the ECB chief will respond on that questions. During the New York session, we have the unemployment claims and continuing claims data from the US scheduled for release 2:30 as well. For all of you crude oil traders, the crude oil inventories scheduled for release at 5 p.m. and at the end of the day at 8 p.m. we got the FOMC member John Williams to give a speech. So definitely Euro is in the spotlight today because of the ECB interest rate announcement. So let's take a look at the euro dollar, because it's of course the most traded pair in the world, and today the volatility on the euro might be increased. What do we have here? The first thing we have to notice is this. Let me just zoom in. Is this candle here? This is a doji candle. It's a pin bar in the form of, as I think it would be kind of a doji or shooting star candle. It depends how do you interpret this very small body of the candle. Maybe let's say, okay, pin bar in front of the shooting star. This means at the level of 1.1909 there's a bearish pressure on the market, and we have seen this bearish pressure already at the end of the July 2021. We have 4 days of a bearish pressure that eventually leads to a new low at the level of 1.1664. By the way, this level will now be our of course technical support, so we will just put it on the chart here. That's the first thing. The second thing is we almost hit the upper channel line, which is not really good that we didn't hit it. That's what I mean. We should be able to hit it, but we didn't. And 3 days in a row there is a reverse. We're already testing right now the level of 1.1806, so we are about 100 pips lower on the technical support. There you go. 1.1806. A low was made at 1.1802, so this is again kind of an important level right now. And as you can see, there is the old trend line support as well, so it might be kind of a tricky to break lower for the bears. The momentum is right now ahead of the level of 51 points is the exact number of the RSI on 14 period on the daily time frame chart. So it might, this level 1.1806 or 1.18 generally might work as a technical support for the market and might cause a bounce higher, and the trigger for the bounce might be, of course, interest rate announcement, monetary policy report, or questions during the ECB press conference, and of course the answer that the ECB chief will give the journalist. So that's the current situation. I would like to put some parallel channel here. Why? Because it is a short-term channel, and I think we just broke out of this channel. There you go. Even if we put the high on the top of the shooting star, you see this small channel here, we broke out of this channel, and I guess we retraced at least 38% of this market. Let me just take a look. Exactly 38%. So I'm going to put more Fibonacci retracements, because anyway today will be all about the euro dollar and the euro related pairs anyway. So this is how it looks like right now. Key technical resistance 1.1993. Of course it didn't change. We still have this level on our chart. We have a 38% pullback or correction towards the technical support, towards the trend line, and now the market is positioning for the ECB interest rate announcement and the reaction for this announcement. If we put the Fibonacci extension, you can see that if we measure this move here as a wave A and this move here as a wave B, so the 100% is at 1.2043 and 0.61% is at the level of 1.1951. So basically nowhere near the technical resistance. So those might be the targets for the bulls, of course, if they will decide to go towards the upside. So that's the situation on the euro dollar. Let's take a look at the euro to the Japanese yen. What is going on here? And we can see straight on we have a reversal. We have a reversal from the supply zone located between 130.64 or 130.93. So this is almost at the upper channel line as well. So what is going on here? Our key technical resistance or our key supply zone has not been violated. Market is reversing today, is already trading at the level of 129.96. This is today's low. We are heading towards 129.63. This is the technical support, or 129.12. This is the next technical support, and the other one is 128.57. So one of these levels will be hit sooner or later. Of course, we have to put our another technical support on the chart, 127.91. This is the low from the 19th of the August 2021. So not too bad. We got the rally. Now we are coming off the, well, it's not the overbought levels yet, but it's kind of a strong levels. We are going towards level of 50. Didn't hit it yet, so I think the level of 129.63 should be a good place to terminate this pullback or this correction on the euro. And then of course we will wait for the ECB rate announcement to see how this will affect the euro to the Japanese yen. And the last one, euro to the British pound. The volatility on this one is very low, but there is something I would like to point out on this market, and this is the recent long upper wicks on a daily time frame chart candles, right? There might be some kind of a bearish pressure starting from 8,591 towards, of course, highs of 8,613. So it's like a 20-25 pips of a bearish pressure, and it looks like we have a very short-term trend line here from the lows of the August. So that's the low, and it looks like we might be getting towards this line. And if there is increased volatility on the euro across the board, we might break to the downside, of course. The next technical support, we need one more. I think this one would be between this one and this one. There is a nice technical support. So 8,542, 8,542, 8,537. This is the zone of the technical support. So if there is a breakout, so this zone is the first target, nearest target for the bears. So this should looks like maybe bounce, maybe breakout. We will see how strong this move down be. And the momentum for now is kind of a positive, not that strong, 56, 55 points. So it's a typical momentum. And if we break below 8,537, this momentum will go down through the neutral level into the negative territory. So we might see euro sell-off across the board as well, at least at this pair, after or before the ECB interest rate announcement and the market reaction on the ECB announcement. So that's everything for me for today on the 3 euro pairs, just ahead of the ECB interest rate decision. I hope you guys like it, and I hope I see you guys tomorrow for another video analysis. So take care, happy trading, and see you later. Bye bye.